I have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. If you are on YouTube, we do have a YouTube broadcast. Welcome. This is my brief bio for those of you who are new. I've been a CTO of several startups here in Chicago. My background is technology, artificial intelligence. I have a master's degree in computer science, building neural networks and AI 25 years ago. So pretty proud of that experience. That's my background. I was an investor and consultant in several startups here in Chicago. I want to take this opportunity to say thank you to all the subscribers. Because of you, I'm able to do what I enjoy professionally, managing and trading my own money. I've been doing that for over 20 years, mentoring and teaching subscribers how to trade stock and options. Trading stock and options involve risk and not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, it should not be assumed that the future trades will be profitable or will equal past performance. All right, trading psychology is important. Let's just go over some main concepts. Dichotomy of control. Talks about basically building trading plan and concentrating on things that you have control over. What do we have control over? Cash. So I would treat trading as your own business. Document your rules. Have a trading plan. From my perspective, most important rule, I mean, you can have many rules, right? And as you go through your journey as a trader, you learn new setups, you learn new things about yourself, right? There's a discovery about yourself from psychology point of view, and then you document these rules. But the most important that I think all traders have are, one is cash. I propose to have at least 30% of your portfolio in cash. If you're new to trading or you're not sure when to get in or get out of the trade, you're kind of in the beginning of your journey or you still don't feel like you're a disciplined trader, I would propose to only have 4 positions and maximum loss of 2.5% of account value per position, and have positive and negative visualization, right? There are different ways we go over this, so let's just review before market open. I would use Stock Forecast Toolbox. It's a pretty good tool that shows you what the current trend in the market is. So short-term trend is negative, right? Downward momentum. Long-term trend is positive, right? Sometimes people ask me, you know, in the support, Vlad, this doesn't make sense. Why would 6 months show uptrend and 10 days show downtrend? Well, because it depends on the data you're analyzing, right? If you look at something over a long period of time, over a long 10 years, it could be an uptrend. Right, Apple is an uptrend if you look in the past 6 months, but if you look in the past 3 weeks, it's a downtrend. So that's the way the model works, and you know that's the same thing. So long term, if you look beyond 6 months, bulls are still in control. If you look in 10 days, bears are continued to pressure the bulls, and it actually sees that the main line, the 444, is slowly given away. Right, we put that line in the sand. This was beginning of July failed breakout, right? And what used to be support for the past 6 weeks, and now we're slowly breaking below that and below 50-day moving average. So 444 is your 50-day moving average. It's the beginning of July failed high, and we are slowly approaching next level of support. I mean, probably this gap, there's got to be some at least pause at 436. That's for bears. Next level of engagement was bulls. Being bulls and bears will be to close this gap, right? 2 gaps that we had end of June and July. So model basically says 436, 438, consider going long. A little bit longer term is 432. That's long-term support that spans over 12 months. We have to go back to the failed rally in August of last year. Kind of was stopped at 432. So most people are still bullish on the market, right? This is just a healthy short-term pullback. Most people are not too concerned about this. So if you're buying, right, if you're long, I would say, well, for day trading, I would use 438, right, as your stop loss. If we drop below 437, 38, 437, I would consider exiting if you're aggressive short-term trader, right? This is the gap. Right, and that's what the model sees as a support. I agree with the model. So 436, 437, about maybe 1.5%. So that's your support number one, right? And then 432 is your support number two, right? That's if we're talking about aggressive short-term trading, and support number two is a long-term support, right? If the bears are able to break 432, then bears would be in control long-term. And we could, next level would be 420 and then 400. Overhead resistance probably last week. 448. That's one of the models. So that's resistance number one, and then this is resistance number two, kind of a medium term. So if you buy in, let's say market opens up at 442, you wait. If you buy at 440 because you think we're going to revisit the highs, right? Next catalyst, we have a Fed meeting minutes released, I think 1 p.m. Eastern, right? That could be a catalyst. I don't think so, but could be, right? If there's some kind of surprise in terms of expectations of inflation or how aggressive Fed will raise interest rates. But the biggest catalyst is NVIDIA earnings next week, right? NVIDIA earnings. So we have AMAT, I think, tomorrow, and NVIDIA next week. So if NVIDIA hits a home run, right, everybody expects the revenue to continue to increase and provide improved guidance, then we could revisit maybe 452, right? If they don't hit a home run, then we'll probably break, or revisit 432 or even break 432. So it just depends on your outlook on NVIDIA earnings. So if you're buying and we are for day trading, I would use 436 as your stop loss. So that's about 442, 436, so maybe 6 points, right? So 6 points to the downside. If you don't like day trading or making decision every day, 432, which would be around 10 points. Maybe slightly below that, 10 points downside. So that's positive and negative visualization, right? You go through scenario next week, NVIDIA hits a home run, doubles their projected revenue from 6 billion to 12 billion, and we are at 452 or even 460. Negative visualization, they just meet their guidance and they don't, provide improved guidance, just kind of, and then market is at 432. So 6 points, 10 points to the downside. On a $10,000 portfolio, I propose not to risk more than $250, which is 2.5%. So try to risk less than 2.5% if you're holding position overnight. All right, market can become more volatile, especially with all the news flow from China. Right, that's kind of the main headline news is China and macroeconomic data from China, and $250, right? 2.5%, $10,000, $250. So that helps you determine the size, right? A lot of people say, Vlad, why are you concentrating on negative? Just concentrate on winners. That's great. We can concentrate on winners, but you have to figure out the size, right? The only way you can concentrate on size is go through this visualization, right? Kind of assume like travel into the next week. Imagine this is the morning after NVIDIA earnings and market is at 456 or market is at 432. How do you feel, right? Fear of missing out versus fear of future regret. And that will help you determine the right size. So if it's 6 points divided by 240, okay, so maybe you can buy 40 shares, right? And if you divide 250 by 10, then maybe that's 25 shares. So that's your position size. So I encourage you not to always trade same number of shares. I think that would be a mistake, right? Because if you're trading $400 ETF like spiders versus gold or silver, well, 100 shares of silver and 100 shares of spiders, you don't have diversified portfolio. You have a lot more exposure to spiders. Sometimes people trade the same amount, let's say $1,000. I think it's much better, right? If you have $10,000 portfolio, I always invest $1,000, 10% of my portfolio, right? And stop loss of 2.5%, right? So that would be $250. That's fine. Sorry, 2.5% of $1,000 would be more. But let's say, what is it? $1,000, 25%, right? Or you invest $2,000, and it's no more than 10% drawdown if you trade in stocks. That's fine. You can always invest, let's say, $2,000 on a $10,000 portfolio with the risk that 10% kind of 50%. Use 50-day moving average or 200-day moving average as your stop loss. That's better, but still you need to be careful to account for underlying beta, right? Spiders. If Coinbase can have beta of 3, right? For 1% move in spiders, Coinbase will move 2 to 3%. So you need to reduce your number of shares. But if you are trading an average S&P 500 stocks, I guess that's fine. You can always invest $2,000. But that's the most important rule, right? Is the risk management, number of positions, position size. I encourage you to have maybe have. I'm actually bearish. Most people are bullish, so I would propose kind of a happy medium market neutral portfolio, right? You have 2 bullish positions, 2 bearish positions. Any questions? And it's all about interest rates, right? Right now, the most important is interest rates. You can see 10-year yield is trying to break through August highs, right? We had after the retail data, retest of October highs, pull back now, trading a little bit higher again. TLT pulling back, dollar is stronger. So strong dollar is not good, right? Strong, high yield is not good for the markets. And you can see spiders are slightly down, SQQQ slightly down. IWM continues to deteriorate. And everybody's waiting for the Fed meeting notes, I guess. All right, let's see. Target had earnings announcement up 7%, right? I mean, the guidance is lower, but they did beat the earnings. So for now, Target is up 7%, and TJX is up 3.5%, right? So we have to watch. Let's put an order to try to close TJX, because I did sell call spread. It did have pretty good earnings. For now, options are not trading. And TJX, everybody is waiting for the earnings call. TJX call. So let's try to close it for 5 cents. Right to close, limit 5. So it's within 2%, so I do have to monitor. Again, positive, negative visualization, right? You can basically kind of close your eyes and watching TJX. I mean, had decent earnings, right? Better than expected. Pretty big gap, up 3%. So imagine it's approaching 89, 90, 91, right? We have a strike price of 91, I believe. Let's just double check that. Right, 91. So I have 2 choices. I can close it and take a loss if it approaches 91, or potentially buy 50 shares or 100 shares as it approaches 91 level. So that would be my thought process. All right, and JD, Chinese stocks are under pressure. JD down 4% after the earnings. TJX is up 3%. Target is up 5%. and Home Depot slightly higher after announcing earnings yesterday. Apple slightly down, Spiders slightly flat, Dow flat, QQQ slightly lower, 30 basis points. Transportation a little bit lower, so not a lot of movements. Oil is rebounding after yesterday. China is under pressure. China down another 2%, so more downward pressure in China. Germany is under pressure, and a lot of them are trading below major support level, like 50-day moving average, right? 50-day moving average, 200-day moving average. So I would watch 50-day moving average on Spiders and QQQ, right? Spiders is slightly below 50-day moving average, kind of a traditional technical indicator. Everybody's watching it, so it deserves. So it's trading below 50-day moving average, and QQQ is trading below 50-day moving average also for a few days, and at a 1-week low. Any questions so far? May look to add to hedges. Okay, I think we have plenty of hedges, so we'll keep an eye. I did close yesterday XLF August, right? So August, Fred was concerned, I was concerned. The goal is to close at least 10 days prior to expiration. It's only a week. Now it's 3 days. So I did close August. I still have September bearish puts and bearish call spreads on XLF. So I'm gonna wait for that. And then yesterday I did partially exit LA Lilly, and LA Lilly continues to trade higher. Raymond, good morning. What do I see support? QQQ and SMH. Let's go over QQQ and SMH. Jeff had a question on QQQ and SMH. Well, current level QQQ, it looks like it's short term. That's the support level. The next level support would be 357, right? This lower Bollinger Band, 353, 357. So if this level doesn't hold, I think quick, maybe 3 to 5% drawdown to lower Bollinger Band. Plus, it's the, I think, what is this retracement? Let's see. Yeah, this is all-time high from last year lows with the 60% retracement, right? So, and a lot of people look at Fibonacci retracements on the on indexes. So if you look at 1 day, right? If you look at 1 day, you do have, I would say 353 is your kind of next level of support if this level doesn't hold. Let's see what is markets. I mean, that's probably longer term. This is not going to happen in 1 day, right? Unless there's some kind of event. Model sees 360 for day trading. 360. Let's see for day trading QQQ 360. Let's see. 1.5% based on the current volatility. Yeah, I think it's reasonable to assume that we will pause at least at 360. So if you're doing day trading, that's close to July low. Well, we're at July low right now, so that would be going back to June 23rd and June 12th. June 12th and June 26th. So pretty, yeah, I would say 357. What did Malik say? 357? 360. So 360 sounds, I agree with the model. 360, 357 is your support if we're talking about day trading, right? By the end of today, we could be, after Fed meeting, we could be at 360, 357. If we're talking about SMH, semiconductors, 147. Let's see, 147 sounds like a good number. Yeah, that's the lows, recent lows. So 147, 144 on SMH. I also agree. Any questions? Thank you, Jeff. Let's see what's the what's the price. Okay, so it started trading. It's at 5.20 cents. So basically the same price as we enter the trade. Let me see. Pause 1 second. It's a target filled. I'm just looking at TJX. All right, so the option price for TJX is still slowly dropping 10 cents, so we're getting close. I think they do announce earnings, not earnings, but the press conference. You got to be careful about the press conference, TJX after hours. Right, because something new can be said. Oh, they actually already had an earning. Okay, I thought it was a little bit later. Okay, so earnings conference call, I think it's out of the way. Let me know if you guys have any questions. Okay. Fred, welcome back. Good morning. Supporters, thanks for that. So very helpful. Thank you, Fred. Joy of missing out. Okay, so this is a new acronym that John. I find today's great day to work on your process. Yes, market is slow. We're working on the process. Process is always important. I would never sacrifice the process, right? I mean, we all want results, right? We're very result. Most of us are very result oriented, and process comes secondary. But I propose to rewire your brain, which does take time, right? But if you do something 7 times, especially in writing, it does make a difference, right? And that's why I encourage you to grade yourself. For me, it's very helpful. Like, it changed my life every time, ever since I started, which wasn't that long ago. Ever since I started to give a grade to myself, right? And you need to be open-minded. Kind of self-awareness is important, right? Nobody sees this except you. So you write down, why did you get into the trade? What was the signal? what was the size, how much money you made or how much money you lost, and then you give yourself a grade, right? If you follow the process and you didn't break it, you didn't lose, you never risk more than $250, okay, you give yourself A and B. I think it's simple as that. And if you didn't, then you would grade C and D. I mean, there are other rules like liquidity. Maybe it doesn't make sense to trade illiquid options, right? Especially for day trading. Okay, that could be one of the rules. Maybe you don't want to trade meme stocks, right? You got burned on meme stocks. You don't want to trade meme stocks again. So as time goes on, you add these rules, right? You don't want to have too many rules, but I don't know, 10, 20 rules, and then you just follow them, right? During earnings, I do a lot of earnings like TJX. You always see me, I look for liquid options that trade in pennies, well-covered stocks have weekly options. So there's like a checklist that I go, implied volatility has to be greater than historical volatility. I need to receive at least 20 basis points. So I go through that thought process of why I get into TGX and then get to, let's say, target. Target moves 20%. I don't feel comfortable doing it as a part of educational process. It's not a good educational process if stock can move 20, 30%. If it was $7 stock or $10 stock and it moves 20%, maybe, right? Because I think we did Lucid last 2 weeks. So then, okay, I feel like risk is less than $250, then I would do it, right? So that's the process. Desi, welcome back. So Desi, JP Morgan, TLT. So we do have a pretty sharp pullback in JP Morgan and banks in general, right? On the downgrade, potential further downgrade of even JP Morgan. So JP Morgan is sitting at 50-day moving average, right? A lot of asset classes are sitting at 50-day, below 50-day, so kind of a line in the sand. And JP Morgan is no different. XLF in general is trading below, or basically testing. It broke down, right, in the past 2 days. It's trading at the 50-day moving average, at 200-day moving average. Pretty bearish setup. TLT is an issue, right? It looks like commodity resurgence of inflation, even though China is given mediocre numbers, but everyone is feared of higher inflation for longer, and the idea that we will never be at 2% Fed target rate of inflation, the new norm would be 3%, right? That's kind of the headline news everywhere. So if the new norm is 3% inflation instead of 2%, then then 30-year yield should be at 5%, not 4%. And TLT is in trouble because of that. I put on TLT with the idea of a hedge, right? That people gonna start buying treasuries when VIX is, high, but VIX is still complacent, right? And the other headline news is that, Saudi Arabia, China, Russia, Japan, they're all selling treasuries, right, at historically low levels of treasury. So a lot of it is just supply and demand, right? Fed has to finance all of the, programs for giving, 800,000 people for giving their school debt. Somebody has to finance it. How do you finance it? You issue treasuries. But, if sovereign governments don't want U.S. treasuries, or they don't want it as much as they wanted before, then, it just, and plus quantitative easing, right? Fed is also selling their treasury holdings. So that's putting pressure on TLT. That is still putting pressure on TLT. TLT is in trouble. I am concerned, right? We're at 52-week October lows. We'll see if this another, I'm basically watching, I'm watching 30-year yield, right? And see if it's gonna continue to break above October highs. If it does, then it's an issue. John, Spider boost. Okay, I'm bearish too. John, all right. TLT is still under pressure. Right now there's a divergence in theory. JP Morgan interest rates were going higher. JP Morgan was going higher. Now JP Morgan falling. You're right, it should be, but it's not falling because of the interest rates. Right now it's falling because of the downgrade. Fitch and Moody's downgrade of sovereign debt, U.S. sovereign debt, and banking sector in general. So economy is resilient, and sales numbers came in better than expected, right? Much better than expected. So right now the fear is that the Fed is forced to keep interest rates higher for longer, and the new baseline will be higher, so TLT is going higher. I think that will definitely be the case, right? It seems like that would be the case until something breaks, right? Nobody knows what's going to break, right? It could be China, right? Looks like they're defaulting on their debt. They're not reporting their unemployment number again, for their, under younger generation, right? Because it's at historical highs. So usually, right, going back to game theory, right? It's a mindset, right? So going back to game theory is that some people see glass full. Just give me 1 second. Sorry about that. So it's just, for TLT to spike, something has to break, whether it's commercial real estate in the United States or in China, or, increase of default rates of small to mid-sized companies like Yellow and Bed Bath & Beyond. I don't know, but it's critical math, right? The idea of game theory, it has to reach a tipping point where a majority of people are concerned. Right now, VIX is low, so majority of the people are not concerned. Interest rates, his view is that maybe we stay a little higher for longer on rates. A little bit higher for longer, I think that's kind of soft landed. That's the majority of people think this way, right? But then yield will not continue going higher. So majority of the people right now think it's not just for a little bit, but for a lot bit, right? That it's going to stay longer, and people are, placing large bets that it's going to stay higher for longer and actually never drop to 2%. You'll find the new norm somewhere, I don't know where, 3% or something like that. NVIDIA, right, so a lot of NVIDIA upgrades raised to 500. I mean, if NVIDIA jumps to 500, then this pullback is going to end pretty quickly. I mean, 500 is not that far. I mean, I actually, no. For 500 is not, I mean, that's 50 all-time high, which is not that much. If it's just 500, I don't think it's going to have too much influence on the market. But if it go, last time it went from 300 to 500, right? 50% rally. I mean, that's impressive, right? 60%. So if it goes up, I don't know, 50% to 600, if it goes up to 600, then the rally, this pullback is going to come to an end. But if it's just to 500, I don't think it's going to make a material difference. All right. Meanwhile, let's see earnings. So sorry, I don't want to miss my earnings. TJX 88.49. Let's see. 88.49. It's not going high, it's not going lower. Apple slightly higher, regional banks slightly higher, banks rebounding, so Spiders turning positive, Dow Jones turning positive, technology still under pressure. Okay. WM slightly higher, so we do have a small bounce back from yesterday's pullback. Energy is higher. VIX is lower. That's about it. Okay. So I would watch spiders, basically what was a breakout, right? 444, that's the line. We touched to the penny again, to this line, and then now we're pulling over. So that's kind of your new high is 444, right? What used to be a support, we broke that level yesterday, and now bulls have to, if the market closes above 444, that would be a win for the bulls. If it stays below, it would be a win for the bears. All right, meanwhile, let's look at the rest of the positions and see if we want to make any adjustment. CLX continues to be under pressure together with the market. So it gave up maybe half of its gains between the reactionary session low and pre-earnings. So still not bad, not horrible, but concerning, right? Concerning nonetheless, and similar with XLP. It did reach 200-day moving average. Looks like it's bouncing back. I don't know how sustainable this is, but it did have a pretty significant breakdown yesterday below this uptrend line, below 50-day moving average, below 200-day moving average. It's a September position, so I still have time. So for now, I'm monitoring Clorox and XLP. Still long consumer staples. I think it is a little bit overdone. Usually 200-day moving average is a good support. And similar healthcare, right? So I'm long healthcare, long consumer staples, right? XLV at year-to-date high. We do have continuation in LA Lilly, right? LA Lilly continues to trade higher, made new highs today. And then CVS continues to consolidate, right? So similar to Clorox, gave up most of its gains after the earnings, but still going through consolidation, still pattern of higher highs and higher lows. Clorox CVX, still bearish on IWM. It's trading below 50-day moving average. This is, I rolled it bearish call spread into October. I mean, the longer it stays below 50-day moving average, the more damaging the chart pattern, right? That means the next level is 200-day moving average, right? So bulls want to see this gap closed again, right? Get above 190. But as long as it's below 190, as long as Russell 2000 below 190, bulls are in trouble. And IWM is very similar to KRE and XLF, which I'm bearish in these positions as well. KRE reached 50-day moving average, reached 62% retracement from this year high to, not this year high, since March sell-off highs to this year lows. Still pretty bearish price pattern. And we talked about XLF. Same, it's trying to defend the 200-day moving average. Talked about LA Lilly. QQQ, if you're not comfortable trading options, you can short QQQ. If you're not comfortable shorting stocks or ETFs, you can long PSQ or long SH. Right? Inverse ETF was designed for that reason because most people don't feel comfortable shorting stocks. QQQ, if you're comfortable trading options, you can. I have October put spread, 360, 340 put spread. I have 345 put, and these are all positioned at almost worthless. SH still, again, you can one of the, if you have 4 positions, I propose 2 of them bearish, 2 of them bullish. So SH, PSQ could be one of the bearish positions. TLT could be one of the bearish positions, right? I think if volatility picks up, people will start buying treasuries. Still managing TJX call. Bearish XLF, XLE, right? Some long XLE. Let's see this. We did have a significant pullback yesterday. Looks like we're recovered most of the losses. We're pulling back now, but this uptrend is still intact in energy. So I'm still long XLE and XLP. All right, any questions? All right, it's 10 o'clock Eastern, 9 o'clock Central. Let's see. Okay, so spiders tested the 444 line and now slowly giving up some of the gains from this morning. Kevin, NVIDIA, yeah. All right, thank you, Kevin. FOMC out of the 3 p.m. today, so might be some surprise. Yeah, I mean, we do have, I would watch, you know, FOMC meeting minutes, 2 p.m. Eastern, 1 p.m. Central. There could be a surprise, or could be just an excuse to rally or sell off. I mean, on one hand, market is extremely oversold, right? On the other hand, it's very vulnerable for any negative news. So you could, I mean, one should expect volatility either this morning, either this afternoon, or tomorrow morning on initial claims and leading indicators, right? Leading indicators have been bearish for many months now, right? That was one of the bearish arguments why we are heading into recession, right? Again, glass half empty. You know, it's been ignored for the past 10 months. Looks like now people are paying attention to recessionary data, and if leading indicators come in worse than expected, that could trigger another, leg down. Looks like KRE is rolling over again. ARC is down. Semiconductors starting to pull back. So again, we've seen this scenario where one day people rotate from technology to value, from value to technology. Today looks like from technology to value. I mean, not a big move, but still kind of people are trying to find safe haven. Downside, what are the chances probability that the gap gets filled back to the upside or not relevant? I mean, I like their shoes, so I do have a bias. I mean, I sold calls because I just didn't think, it's going to move 40% higher, but my opinion that it will move with the market, right? Market is going to be down, on was going to be down. Market is going to be up, on is going to be up, right? So at this point, it will fill the gap. If NVIDIA hits a home run and market is at all-time high, it will probably close the gap. If NVIDIA, pulls back, it's going to continue to pull back. Unless there's some kind of microeconomic data, right? They hire a new CEO, or they have new shoes, and retails. The July numbers, everybody's buying their sneakers, right? I mean, I go to Orange Theory. Everybody have their shoes. All my kids have their shoes. My wife. So, I mean, it's one of those high-flying stock that maybe a little bit ahead of itself, but right, it doubled since last earnings. So it's time to kind of pause. I mean, if you're a long-term holder and you love the product and you want to hold it for the next 5 years, usually these are your opportunities to start slowly adding to your position, right? Because you did get a pretty significant pullback. But if you're not doing this for long-term investment, I would just stay away for now. Let's see, but more downside possible problem. MMFI, Kevin, thank you. Let's look at MMFI. We haven't seen it. I mean, it had broadening, right? The rally had broadening. So definitely, definitely hit almost pre-pandemic high, right? So stocks above 50-day moving average. Yeah, so we almost got to the point of previous rally where 80% of the stocks are above 50-day moving average. And that's a very strong argument for the bulls, right? It's a very strong argument for the bulls that this is not Magnificent Seven anymore. The rally has broadened to cyclical names, and 80% of the stocks are above 55. I mean, it did have a sharp pullback in the last 3 weeks, kind of a elevator up, elevator down. And it, kind of similar to March sell-off. So at this point, it doesn't look healthy, right? It looks like less and less stocks are able to hold on to their 50-day moving average. Thank you, Kevin. Fred, yeah. I mean, I love the shoes, yeah. So when do you prefer selling calls instead of buying puts? So Ted, when do I prefer buying puts? If I have an opinion that the market is going to make a big move, right? So the reason I bought puts on IWM and QQQ, because I think between now and October, it's not going to be a healthy pullback of 2 to 5%. It's going to be a healthy pullback of 10 to 20%. So I'm buying put spread, and I'm intentionally making wide range between strikes, right? So if you looked at IWM, I'm not selling $5 spread. I'm buying I'm buying 190, 180 put spread, right? Because I think we will get to 180 sooner than later. So if you anticipate large move to the downside and jump in volatility, then you do wide bid and ask spread. If you think market is going to trade sideways, you sell call spread, right? Because you think, nobody knows when they're going to have a pullback. NVIDIA have a good earnings. maybe we trade up and down, then sideways, then I would say sell call spread. If you think we're going to have a large move to the downside, then buy put spread, wide put spread. Excellent question, but a lot of it is just expressing your opinion on the market. My opinion on the market that it's going to roll over. But timing this has been difficult in the past few months, obviously. Thank you, Ted. All right, it's 10:09. Let's see how's TJX doing. Let's look at spiders. 15 minutes. Okay, so spiders fluctuating between gains and losses. TJX kind of not going anywhere. Well, I mean, kind of reflecting the moves in spiders since the session started. QQQ actually turning positive. And so far, uneventful. Looks like TJX wants to break out. We'll see. So again, positive, negative visualization, 10-10. Next 15 minutes, if we're trading above 90, right, and we're approaching close to 91, I have a decision to make, right? Either I close the short calls and take a loss, right, small loss, or try to defend it, maybe buy 50 shares of TJX, which is also possible, and try to minimize the losses or turn it into the positive trade. So, but we do have to break through the session high at least, which we're close. So 89 is the session high. I mean, 2%, there's still room. So we'll have to wait and see. Thank you, Fred. In terms of earnings, let's see. I think Cisco is announcing earnings after hours, if I'm not mistaken. Let's see. Yeah, so Cisco after close, Synopsys, SMPS after close. That's about it. So Cisco, Synopsys, and then tomorrow before market opens, you you have Walmart. Yeah, you have Walmart and Tapestry. So a few earnings today and tomorrow. Probably nothing that's going to change the view on the market or direction on the market, but earnings nonetheless. And looks like spiders again are knocking on the door of 444, trying to break above that level. Bill, thank you. 10, 12, 3 minutes left. Let me know if you guys have any questions. See you PM. Thank you, Bob. Yeah. All right. That's all I have for today. See you at the closing. Oh, today's Wednesday, so I'll see you tomorrow morning. I'll see you tomorrow morning, and Scott will do the closing bell today. Thank you, everybody on the YouTube broadcast. Thank you, everybody else. And I will see you tomorrow morning. Thank you.